Hello everyone, dear friends, we are in touch with you again, ArbitrageScanner. Today you'll find another case study from our client who earned $177 in just 1 hour using the Futures+Futures strategy. Moreover, compared to the cases we reviewed earlier, there will be no work with funding here. Earnings were made exclusively from open ones. Long and short positions, let's see how the client did it. So, at the second, let's look at what the situation was like before opening the positions. On the KuCoin exchange, the token price is below 1.562, while on Gate it's above 1.578. Thus, right now the spread is about 1%. What else we can see on the KuCoin exchange page is the funding. It's quite attractive here, almost minus 2%. If the client opens a long position on this exchange, soon they will receive that 2%. However, as I mentioned earlier, funding will not be involved in this trade. And now you'll find out why. Let's fast forward to the 4th second where the client switches to the Gate exchange. So we can take a look at the situation here and see what we find. Here the funding rate is almost the same as on KuCoin and with an open short position. These 2%, on the contrary, will be deducted from the client as a fee. Therefore, it makes no sense to keep the trade open for a whole hour and a half because the funding fee on Gate will simply eat up the accrued funding rate on KuCoin. We've clarified this point about funding, so let's move on. The next stage is opening positions. Let's go back to the 3rd second again so you can see that the amount of tokens was set for the clients in advance. Here it's 270,000 and on Gate it's also 270,000. Here, the classic 2 times leverage is used, both on Gate and on KuCoin. This is done to increase potential profit, but there's one more small but important detail. The client switches from cross margin to isolated margin. As I said, this is an important step because if you use cross margin, then in the event of a liquidation of the trade the client opened, the main account balance will start being used. And this applies even if those funds were not used when opening the position. For example, they're just sitting there in your account. You have an open trade with cross margin and you also have some additional free funds in your profile. And if the market moves against you in this case, you risk losing not just the funds you used to open the position, but also your entire available balance that remains in your account. However, if you use isolated margin, you don't need to worry about liquidation because in that case, only the funds used to open the position will be affected. That's why, before opening any positions, always check which type of margin you have set. On both exchanges here, again, as we can see, isolated margin with 2 times leverage is set. Let's move to the 19th second, where the first long position is opened. We see that the order was placed at a price of 1,563. Again, the client will enter the position in parts of 270,000 tokens each, just as he did earlier. Why this is the case, we explained in the previous video. We also have a full video on crypto arbitrage. A prompt will appear on the screen. And I guarantee you that after watching this video, you will have no questions about how exactly to enter a trade. Let's keep watching. At the 22nd second, that is literally just a few moments later, after he opened the position, he noticed that the position did not start to fill. This isn't very good, so the client enables a follow order to buy more tokens at the average price. Next, the client goes to the Gate exchange and opens his first short position there. And immediately after that, he presets the next amount of coins for which he will open his next short position. Again, an important point, on some exchanges, when you open a position, after that you have to re-enter the number of tokens. The long position with the follow order started to execute. Then, about 2 minutes pass after the first entry into the trade, before the client opens his second short position. That is, at first he planned to open a position on KuCoin. Here we can see that he is actively tracking the token price on KuCoin. However, at some point, a downward candle appeared here. And so the client switched to Gate to open a short position there. The short position, by the way, was executed immediately and the client returned to KuCoin. To open the second long, here you can observe an intermediate open position on KuCoin for a token amount of 540,000 with a current value of 8,500 USDT. That is, the client opened it for 4,200. He used his own balance, but 2x leverage allowed him to buy tokens for a total of 8,000, twice the original amount. The average entry price was 1,564. You can see the same thing on Gate. Here we notice that the amount is the same as on KuCoin, 540,000 tokens. And here the average entry price is 0.01583. That is, the client has locked in this spread and soon the prices will begin to converge. But we see that this is not the final position yet, because the client again entered 270,000 tokens on both exchanges. This means that he will additionally buy more tokens. Let's fast forward to the 5-minute mark because that's where several more positions are being opened. At 5:03, the prices diverged favorably again, meaning there was a difference here about, I don't know, let's call it 22 units, and the client opens a long position, after which he immediately opens a symmetrical short position. Then the client checks that the orders were indeed executed. Here we see that the amount is already 810,000 tokens on Gate, and the same situation will be on KuCoin. No, 810,000 tokens. The client enters the number of tokens in advance again and waits for the prices to diverge once more. The client doesn't immediately open the next two positions, but instead transfers the transaction data, intermediate data, into his own table, where he keeps track of his cases with such a cool, useful spreadsheet. To help you keep track of your arbitrage strategies, we're ready to share this in support. Just contact us using this link. As for the client's trade, he first enters the average entry price. We can see that the spread is calculated automatically. It amounts to about 1%. Additionally, among the extra details here, you can see the exchanges he entered as well as the token name. After the client enters the trade information into the table, he waits for the right moment to re-enter the position. At 7 minutes and 39 seconds, the prices diverge and the client sequentially opens a short position followed by a long position. Next, he refers to the table with the current position. The token amount is now 1.8 million, and the average entry price has changed. Previously it was, just so you know, 1.564, now it's 1.569. So, what is the source of the profit? We can see it in the unrealized P&L column. Now let's move on to the open position on Gate. Here, the average entry price has also increased, which is why the client has a negative unrealized P&L. Because for this position, a short was opened, and at this particular moment, it's more of a hedge position. Again, the number of tokens is set in advance, for which the client will once more open two positions, after which we again wait for a price divergence of 820. By the way, please note that the client is changing the number of tokens they plan to buy to 260,000. The thing is, on Gate, the price went up and we can see that the maximum number of tokens available to open became like this. So not 270, but a bit less. The client didn't get flustered and simply reduced the number of tokens they planned to buy by 10,000. However, naturally, if we change the number of tokens on one exchange, we do the same on the other, so that the positions are opened in equal parts. At the 9th minute, the client opens the 5th short and long positions. Once again, the average entry price on Gate has changed, and this needs to be recorded. Previously it was 86, now it's 85, which means that for this position, instead of a loss, we now have a profit. The client goes to the spreadsheet and records the change in the average entry price. On KuCoin, the average token price has also changed. Previously it was 6.8, and now the client will change it to 6.7. Basically, if you look at it this way, let me go back, there was a 1.15% spread here. However, the client skillfully opened positions, and since he changed the average entry price, the spread remained the same. And as you can understand, it's very good that the client managed to maintain this 1.15 spread when opening a larger number of tokens. Don't forget about the total number of tokens, it comes out to 1,340,000 on both exchanges. The client enters this information and will need to close both positions for the same number of tokens. After entering the number of tokens for which the position needs to be closed, the client goes to the exchanges. And here, they switch the button from open to close. In other words, they plan their exit from the trade in advance so that at the crucial moment they don't make a mistake and accidentally open new positions. Great, the positions are open and the client has already prepared in advance for the fact that these positions will need to be closed. And all that's left to do is to monitor the token's price. The video lasts another 50 minutes, but to save you time, I'll only show the key moments of the trade. So I'll be fast forwarding and stopping only at the most interesting parts. Here, we need to fast forward to the 12th minute. Nothing particularly interesting is happening with the token price, it fluctuates. It's moving within certain specific limits and there isn't really any significant price change. But it's important to note that at a certain point, the client adds and sets take profit and stop loss on both exchanges. First, he turns to the exchange. KuCoin and sets a range within 88% for both take profit and stop loss. Then he switches to Gate. Here too there's a TPSL option for the entire position. He opens the window. It additionally configures the setting to 88%, but then it retrieves the specific take profit value from KuCoin and subsequently inputs that exact numerical amount as the stop loss on Gate. Let's take a look at this now. Here, he entered the trigger. The stop loss price, which he took from the take profit on KuCoin, he does the same with the stop loss price. As for the stop loss on KuCoin, it becomes the take profit on Gate. This is standard practice. It's necessary so that in case of liquidation, both positions are closed and both TP and SL are set. Again, we monitor the token price on both exchanges. At the 15-minute mark, the token price is rising rapidly. Gate acts as a hedge position where there is a temporary loss. And as for KuCoin, on the contrary, there is a profit here. Let's take a look now. So, on Gate it's minus 470 USDT and on KuCoin it's 449. Sorry, this way it will be clearer. 423 USDT. We saw a profit. On KuCoin and on Gate, the hedge position here is at a loss, minus $320. In other words, on Gate, the hedge position here is actually in profit. However, on KuCoin, the profit amount is much higher and as a result, the overall trade is still profitable. That's why this strategy is called risk-free. Even if the market moves against us on one of the positions, we still make money on the other position. At the 20th minute, the token price shoots up again. Here we see green candles, two large ones, and that's why KuCoin still remains the profitable position. On Gate, we still have the hedge. However, after 5 minutes, the situation changes and the price drops again, getting closer to the value at which the client opened both positions. On KuCoin, the profit fluctuates around 500 USDT. And on Gate, the loss is 350 to 400 USDT. At the 35th minute, as always, the profit on KuCoin is 700 USDT. And you can also see that the prices are gradually starting to converge and the price spread is getting smaller, sometimes even at certain moments. Here, the difference is literally 2 or 3 units and the time is already 41 minutes. Since the positions were opened, the situation has changed. A few red candles going up. Next, there is already a loss on the position on KuCoin. Here, Gate is open and we also see that the realized P&L is small. There is still a profit on KuCoin, a small one, 21 USDT. And at some point, the price starts to fall down again. By the timestamp, it's already 42.45 and the prices are literally converging. The situation has changed a bit. On Gate, there's profit now, on the contrary. At the 43rd minute by the timestamp, the prices have already converged, which means it's time to close the positions. The prices converged at this value, 1,586, which is actually a profit for KuCoin, because the average entry price was much lower. And on Gate, the loss isn't that significant, because the price was around 1586, maybe 1587, and here the token's value only went up a little. Missed the first closing of the position by about 2 units. The short position is closed for a total of 135,000 tokens. As we remember, the positions were open for 270,000 tokens and they're being closed for even less in smaller lots. This is necessary to avoid slippage and to get the maximum profit. After the short is closed, the long is closed immediately as well. Next, we see that the client is intermediate. They enter the closing price. Here it is 1,588. Now let's look at the order history on KuCoin. It's also 1,588, meaning the prices matched and he closed 2 positions. Again, he preliminarily enters the number of tokens for which the position will be closed and waits for the next price convergence. Here the price is matched, he closes the short, and immediately after that closes the long. It's important to act quickly. Next, about 5 minutes will pass before the client closes positions again. At the 49th minute, the client first closes the long and then immediately goes to the Gate exchange and closes the short. Here we observe the interim results. There are still 935,000 tokens left on KuCoin that need to be closed, but some realized penalty has already occurred. That is, the client has already earned 90 USDT from the position on KuCoin, and potentially he can still fully close this position to receive an additional 211 USDT. As for Gate, here it was possible to successfully close the short twice at the same price of 1.588 and take a small loss of 3 USDT. Here, unfortunately, the price was higher, so the loss ended up being 25 USDT when he closed the short for the second time, the short position. The price shot up, the client closed the short position, and then immediately the long position. This is already the fourth closed position in a row. However, for the closed long position, it was necessary to place a trailing order here so that this amount of tokens would be filled quickly, 51.16. Once again, the client closes the short position as well as the long, and again goes to open orders and places a trailing order. By the way, the realized P&L is already 164 out of the children. As for the P&L on Gate, here the profit is offset by what was earned on KuCoin, so there is no loss. A couple of minutes, about 2 or 3, after the last positions were closed, the token price drops both on Gate and on KuCoin. Therefore, to avoid taking risks, the client once again reduces the number of tokens to be closed. Finally, the prices converge, and at the 56th minute, the client closes the short and long positions for the 6th time. Then the prices diverge a little again, and it takes the client literally 30 seconds to wait for them to converge and close the positions alternately once more. Long and short, here we can observe this happening. First, the short position is closed, and then the long follows. I suggest we move on to the final results now. Meanwhile, in the background, we can see the last few positions, 3 or 4, being closed. Minute 103. We can move on to the results of the trade. Here, the client has a 1% profit on KuCoin. The average opening price was 5.67, average chain. At closing, 576, the client transfers this data into the table and indeed gets that realized P&L. Now let's take a look. Here is the realized P&L, 120. You see, in other words, it's about the same as in the table. Here though, it's $105 because the table hasn't yet accounted for the trading fees. Now let's look at what happened on Gate, and here the client also managed to make a profit on the position on Gate. The average entry price was 1.585, but at exit, the price was lower and the client made a profit of 0.72%, which translates to 77.5 USDT. These data are also entered into the table, and as a result, both positions were profitable. It's also important not to forget to calculate the trading fees for opening and closing the trades. For this, the client has a separate column. The commission is in USDT. As a result, the client earned 177 USDT in 1 hour of active crypto arbitrage. That's all for now. Let us know in the comments what you think of the trade and if everything was clear. Also, don't forget that you can get the same table absolutely free. From us, contact our support. And of course, to make such great deals, the client used our crypto arbitrage products. ArbitrageScanner. If you want to do the same, go to our website or write to our manager. We'll explain and show you everything. This was the ArbitrageScanner channel with you. Wishing everyone big spreads. Goodbye.